We start today's market talk. Patience and perspective bring enduring advantages in investing. First is patience to sit with an idea long enough to understand it deeply, and perspective that comes from thinking independently about what truly matters in a business. An LLM can tell you what everyone thinks about a company, but it cannot help you understand which commentary matters and which is noise. Market outlook. Great expectations are riding on this festive season. GST cuts, dovish monetary policy, relaxation of rules to support credit growth, strong sales during Navratris, and hope that demand boost will continue till Diwali is keeping the spirits high. Traders in equity markets are betting on a strong rally with MTF borrowing at a new high. Apart from GST cuts, lower inflation is another reason for increased consumption spending. Lower inflation should support urban consumption. Rural consumption should get a boost from good monsoon. So overall, the outlook is positive on consumption. RBI announced a plethora of deregulatory measures aimed at boosting credit to the economy. So, expected credit loss framework to provide for troubled loans would be implemented in April 27 with glide path of 5 years. Guidelines to lend against securities and to capital market intermediaries have been eased. Risk weights on infrastructure reduced to give NBFCs more freedom to lend. Key overhang from for NBFCs like HDB Financials of curbs on overlaps in core business functions between banks and group entities have been relaxed. Now, HDFC Bank doesn't need to dilute its stake in HDB below 20%. Key issue is banks are freer than before to meet the demand for credit for various segments that were previously seen with caution. Now, the key concern should be that the growth without jobs is a house built on sand, unsustainable. GST cuts are welcome, but they do not address the fundamental issue with consumption. That is, Indian labor market is facing a dual challenge of underemployment and unemployment, so strengthening consumption will be difficult. Now, despite a surge in IPOs, investors aren't seeing much gain. The sole bright spot in this IPO rally was Urban Company. Despite strong investors' demand with subscriptions, most listings have failed to deliver. The another key concern is the should be the weakness of the rupee, which has been constantly declining against US dollar and had reached that 88.71 odd level. And this should be one of the reasons for the negative attitude of FIs towards Indian markets. Now, seeing the FIDI data, uh, as of 3rd October, FIs added net shorts to index futures and particularly to Nifty, while they were bullish on Bank Nifty and Midcap Nifty. In terms of index options, they sold calls and they bought puts. So net, they are bearish on the market when they sold in cash also. But they have reduced their selling of calls. But right now, they are basically only selling or buying options as a protection to whatever is the positions they are holding and on index futures also. They are net short. Pros, they are generally flat now on in terms of index futures, but they have bought calls and they have sold puts, but the number of calls they have bought is much higher than the number of puts they have bought. So they are actually net bullish on the markets. Clients, they are strong bullish in terms of index futures, while they have sold calls and they have sold puts also. But the number of puts they have sold is double the number of calls they have sold. So they are net bullish on the market. So to see pros and clients are bullish while FIs are are bearish on the market. In terms of monthly data, so the At the beginning of September, FIs were net short 1.91 lakh positions in index futures. It reduced to 1.42 lakh closer to the expiry, and then it has now again increased to 1.89 lakh. So they have been adding short positions. Along with, it made a low on 30th September of 24,600 in this last week or last month or so. After that, since they have turned bullish in terms of uh, call Y additions and lesser of put Y, so they have been adding more calls. So index has also, Nifty has also moved up. Now coming to US, S&P 500 had hit 6,700 for the first time on Friday as US markets shrugged off concerns over US government shutdown and its effect on economic data. All trade, AI trade continues to grab eyeballs. OpenAI wrapped up secondary stock sale that valued OpenAI at around 500 billion, becoming world's biggest startup, and that was one of the reasons for the rally in uh, all the AI related stocks. So the US government bond yields declined a bit, nothing significant here. Dollar also declined. Brent crude came down around 6% because OPEC decided to raise production in November. Gold continued its rally because of uncertainty related to the US shutdown. Similarly, with silver was up 4%. Copper also rose as the dollar declined around 6%. Bitcoin also moved up 9%. Again, all assets which are related to dollar and US weakness are going up. S&P 500 made a fresh high, as I told you, hit 6,700. Uh, Nasdaq 100 on the weekly charts, it again went up around a percent. And Dow Jones also was up around 1%, so made a fresh high, touched 47,000. Coming to India, India VIX decline has come down to around 10 levels. So it has declined significantly from 11.34 levels it was there earlier. Uh, Last week, if you see, Nifty rebounded from the lows, and on the weekly charts, it is above the 20 EMA. On daily charts, it formed a record session count pattern. Record session count pattern is that it continuously declined for 8 or 9 sessions and it became oversold and then bounced back from there. So it was a very typical pattern it make. And then we saw a pullback rally for the last 2 days. The major catalyst is Nifty Bank for this. On hourly chart, so if you see the Nifty, last week I had mentioned that the Nifty was oversold and then it bounced back from there, consolidated for a few days around 24,600 and then has risen from there above the 20 EMA. So on hourly chart for short term, it should be positive. The RSI is also going up, so it's reached 60, so it should be positive here. Nifty Bank, if you see, it made a sizable bullish candle on weekly charts. The prime contributors were Kotak, Axis, and HDFC Bank for this rally. On the daily charts, it has risen above the 20 EMA, all moving averages, and is now headed to around 56,000 level and then may test the previous high. The rally was supported by PSU banks, which has broken out from the intermediate resistance it had. So it has broken out and now may be headed to the previous all-time high closer to 8,000 level. HDFC Bank, there was some stake sale, but it bounced back. But the updates are weak, so let's see if it can hold the 200 EMA. Reliance remains weak below the 200 EMA, so nothing much is expected, though it has kind of doji now. So let's see what happens here. Infosys took support at the demand zone around 1400 odd levels, so it is now poised there. So let's see what happens, whether it can rebound from there or down. But I think this will wait for the earnings season to commence now for further action. Nifty Metals was one sector which was positive. It made a fresh high and it has broken from the previous high level, which was proving to be a resistance here. last week. So it has broken above that. So this is one segment which is in momentum. Nifty Auto Index has retraced, but I think this should be in momentum because as the business updates come, CPSC index made a fresh breakout kind of thing above the 20 EMA on the weekly chart. So this is one segment which is in some momentum, and defense, which bounced from the 20 EMA after the decline last week. It has bounced from there. So it's again which is performing well. So basically Nifty metals, PSU banks, private banks, financial services, and CPSC index are the ones which are outperforming. Midcaps recovered from the drubbing it had last week to around 1.8%, and small caps also recovered 1.8%. So we'll see if the rally continues or sustains above this 24,800 level for Nifty, then mid caps and some confidence will come among traders, and Nifty caps and small caps should perform well. I'll cover now two stocks. First is BHEL. It manufactures boilers, steam turbines, and generators, high voltage direct current HVDC systems, EHV substations, air insulated and gas insulated, power transformers, and reactors. Current thermal capex target is 97 gigawatt until FY35, pending tendering of estimated 45 gigawatt. A pickup in power demand growth over FY 27-28 is expected. It was subdued in FY 26 around 0.5% year on year versus 5 to 6% average year on year. Now, coupled with replacement of old thermal plants, because there's a requirement to change or upgrade the older thermal plant, 37 gigawatt need to be replaced, which are more than 35 years old by FY32, can lead to higher thermal capex. It can lead to potential addition of another 15 to 20 gigawatt of thermal addition beyond the 97 gigawatt target. H2 FY26 should start recording an uptick in execution and margins. 7 to 8 gigawatt yearly of thermal order inflow in FY26 to 28, as it has already won 18.4 gigawatt in FY25 versus 9.6 gigawatt in FY24. So there is a adequate amount of order inflow. Only thing which is required is execution, strong execution of rupees around 44,000 crore, 44,800 crore and 50,400 crore over FY27-28 on robust order book of rupees 2 lakh crore plus in FY25 can get this stock re-rated and will lead to improvement in operating margins to 14 to 15% by FY27-28 due to operating leverage, and gross margins should go up to pre-COVID levels of 35%. So this is what is expected. So now, as I told you, roughly 37 gigawatt of thermal capacity would require renewable or to be replaced by FY32, and roughly 50 gigawatt by 2040, which would be around 35 odd years old. So this is additional requirement which is there for this company. Uh, Coming to quarterly results, the quarterly results in June were subdued, generally flat in terms of revenue. Expenses went up, so there was a operating loss uh, and net loss also. So that is the problem with this stock, especially in the first quarter of the year. Subsequently, it recovers. So let's see if it is able to improve its performance. The order book got around 13,000 crore orders this quarter, and total order book is around 2.04 lakh crore. Revenue should accelerate on record thermal order inflow of 9.6 gigawatt and 18.4 gigawatt in last 2 years. Should translate to incremental execution. So that is what people are hoping for. Order inflow is good. Execution has to now catch up, so which will help the revenue and operating leverage. Operating margin should also expand. So if you see, the cycle of operating margins had dipped from around 14-15 to even zero, and then has risen from there based on fresh orders. So FY26 it should reach 8 plus 8 plus levels, and then 14-15 level as the more orders are taken care. Last cycle it was 15-20%. So hopefully there should be a starting of a next cycle. In terms of income, It did around 28,000 crore in FY25. It should do around 36,000 crore and 45,000 crore in FY27 and 26 respectively. So means revenue growth of around 20%, 20 to 30% per year the next 2 years. So EBITDA would go up nearly 100%. EBITDA growth should be around 100% because of operating leverage, and profit should also grow at similar level. So we are talking about adjusted EPS of around 13 in FY27 if everything goes fine. So which will boil down to a target of around 390 or 13 times, 30 times EPS for FY27 to around 390 or presently the stock is around 245. Coming to the chart, it made a high in June, July of FY24, and after that, it has been on a decline. So it has to break above this declining trend line around 260, and then it can go up. So we'll have to watch for this because this should prove to be a resistance here. RSI is positive, it's trending upwards. So that should be positive for this stock. The next stock is Hitachi Energy. Their business primarily revolves around the entire power value chain, serving customers across utilities, industry, transportation, data centers, and infrastructure sectors. The outlook for the sector appears promising, with the government increasing expenditure on renewable energy and implementing favorable policies. They can capitalize on emerging opportunities in data centers, services, exports, and digital segments through focused strategies. Revenue CAGR of 43% over FY25 to 28, EBITDA margins of 16% versus 9.3% in FY25. In the transmission sector, it received an order of 30 units of 50 MVA 765 kV bulk transmission equipment for national transmission utility. In the renewable energy space, specifically solar, the company won orders for 400 kilovolt GIS, which is gas insulated high voltage switchgear in Tiroda, and capacitor banks for Statcom projects in Bikaner and Barmer. It received an order for a 220 33 kilovolt GIS substation from a semiconductor manufacturer in Chennai, underscoring its robust presence in the industry segment. It secured export orders from Europe, South America, and Asia. See, in terms of high voltage direct current, HVDC, there are five projects which were allotted in the last year. So, two projects actually, and five are in pipeline. Out of these two projects, first one was allotted to Adani Group, and second to PGCIL, that is Power Grid. Both ordered equipment from Hitachi Energy. Hence, this stock should be focused. Each project is roughly 20,000, 25,000 crore. So all these projects are big projects, and the sizable order inflow should come to whosoever supplies the equipment. Uh, and there are a number of HVDCs which are under planning. So it's got a good revenue visibility. So talking about Bhadla Fatehpur HVDC backdrop, it is awarded to Adani Energy Solution, and they awarded the project to consortium of Hitachi Energy and BHEL. Transmits power from renewable energy zone at Bhadla, Rajasthan to Fatehpur, UP via 950-kilometer long circuit, 6,000 megawatt, 800 plus minus kilovolt bipole and bidirectional HVDC terminal. Decent scope, capacity to approximately power 60 million, roughly 6 crore households in India. Uh, Last quarter, they got around 11,000 crore of orders. They did around 15,000 plus of revenue, which was up 15% year on year. Profit before tax was up 10x, and profit after tax nearly 11x. So that is very positive because the EBITDA margins improved. They are targeting 15%. They have an order book of 29,000 crore, which provide revenue visibility for several quarters from here. Operating margins should improve. So they have reached 11 odd percent. So it should go up to 16%. So if you see here, from 4%, it has gone to 11%. So it will translate directly into revenues because once the operating margins improve. And if you see the domestic and export, they did around 6,400 crores. So 47 and 17 was a distribution, and this distribution will remain roughly 3 is to 1 distribution will remain in terms of domestic and exports. Majority orders are coming in transmission and railway and metro. Others are industries, data center, etc. are also moving along. So product segment where they're supplying equipment is the one which is most promising for FY26, and utilities segment, which is where they are getting orders and undergoing various projects. So split by sectors, basically 81% was utilities in terms of transmission, and industries and transport were a little bit lesser. And in terms of products, so they supplied 55% was the equipment they supplied, and 39% were the projects, and 5% was repair and all services, etc. They have done around 63,880 odd crore, 85 crore of revenue in FY25. They are expected to increase their revenue by around 50% in FY26 and 40% in FY27, so which is good. And EBITDA is expected to nearly double in FY26 and nearly go up 60% in FY27. So which is likely. EBITDA margins are expected to improve, which should directly help in profits, which are likely to also double in FY26 and go up substantially 66 odd percent in FY27. So the diluted EPS expected is around 316. So taking 300 also as a ballpark for FY27 at 60 times, 18,000 should be a fair value for this stock. Seeing the chart, it rose from the lows it made around 10,000 in April and rose to around 22,000 after the good performance in the last two quarters. And after that, the stock has declined. So every dip closer to the 17,000 or the 200 EMA should be a buying opportunity for with this stock for long term. I have finished. We'll take questions now.